Hello, hello, hello. How is everyone doing? We're actually getting 26s now. Sake. See if they take it. Quite an interesting session. Massive ranges in treasuries, to be honest, the last couple of days. We did okay today. Wait for some people to jump on before I start running over treasuries, and then we'll jump into what's been happening. V, how's it going, dude? How's it going? Yeah, so pretty much quite a crazy day. I'll bring up this is the 10-year. This is last week's profile, the week before. So now we've essentially filled out the bids that CPI left, which is these singles here. So we've just now really filled that out. Last 2 days we've sold off aggressively after the bond auctions, and then overnight session is went completely bid. We've then opened the day, went bid, some news has come out, then we've sold off, went back up, and now the auction has come out again, and we're now looking to sell off again. So interesting day. Caught a good short, to be honest, from I think it was evens or just half here, and we took it down to the value area low. We were looking to try and get 26s, but there was huge icebergs at 28.5, 28s. So I just closed it. I wasn't holding into the bond auction. It was the 7-year today. It looks like we're selling off. We went bid as the news came out. I took a short at 31s and covered about 29.5s, if I remember correctly. I think we took 3 ticks out of it. Now we're selling off. To be honest, I didn't really plan on holding the trades, because I think we could. I mean, it's easier in hindsight. We are selling off now. Rob, how's it going? Terence, how's it going? Rob, I see you were taking some trades in the wonderful land of the bonds today. How did you get on today? Were you quite a good day in terms of ranges, to be honest. So just before the bond auction, as I was saying, I got out at about 28.5, 28s. We took some off at those two prices, and that's pretty much been it. As you can see, look at the amount of, literally as soon as it's past 1 PM, these orders come in. I have noticed though that the bid has been extremely weak. I noticed that, of course, once I got out. So basically, all these layering here, as soon as they're tapping in, like, 100 contracts, even a few contracts, the bid is disappearing. So a lot of these orders here are relatively fake. Not saying we're down quite low now, and I think we are now approaching pretty much the low of session, for regular trading hours anyway. It's a good day. Nice one, dude. Nice one. Yeah, so I think most likely what I expect to happen is selling to continue down to potentially low of session. They then maybe have a hit at it to take it a little bit lower. Just cannot really see us, getting down to 20 and a halves and clearing that this session. I'm suspecting, somewhere between these two lines here, someone will step up, absorb, and then we'll probably work our way back up, to like 29s. So that is pretty much it. And then if we jump onto the profiles at the moment, this is an hour you're looking at here. This is a monthly, these are the weeklies. Just to get an idea. These are no longer low volume anymore. So every time the market's closed down here, if you can see the last couple of days, we sold off aggressively yesterday and then just went bid for the whole of overnight session, right back up to yesterday's high, hit it a little bit, then just pulled in. So pretty big ranges today. But let's jump into, let's jump into indices. I don't want to bore everyone with treasuries. It's not exactly the most entertaining markets, but they've been moving the last few days, which is good. And we'll catch up. Look at this building. Quite strong GDP numbers come out today as well, which stock market loves. Okay, let's quickly jump into this and see where we're at. Okay, so as you guys know, we've had this huge sell-off. This is the regular trading hours from yesterday. We had the news dip down. Yeah, round about here is the news came out today. I think it came out at 8:30. Market's basically taking all the stops down here, and then we've just went bid for the day. Notice that it's went right back up to this extreme point of control, high volume nodes. And now we're creating a sort of double distribution. What seems to be happening? It's kind of annoying me that this is scaling is a bit off. Come on, Sierra, sort yourself out. There we go. So let me know, how's everyone's day been going? Do you guys take any trades? Let's see, overnight high. Yeah, just a nice glory sweep here of overnight low, isn't it? Here. Okay, so relatively interesting session. Another 20,000 delta day. We've got all this liquidity up there. Good to see this annoying algo is definitely back. It's certainly making the money, otherwise it would have been off. Look at all this liquidity up here. We can see that part of this is not real, but all this up here most likely is. But yeah, the market needed a bit of a recovery, I suppose, after tanking the last few days. Okay, so sell side at the moment, we basically need to try and reclaim, this is the previous day close, as well as the overnight high, roughly, here, which the market has already held. So we had to break and then retest. We'll probably look to see some absorption at these levels, then take it higher. So we could, in theory, continue to go bid and try and reclaim 32s, where the high volume node is, or we can basically pull back in, chop around in here. There's not really any more data coming out, so we're just going to mark it on close happening. I think what we'll do is we'll jump in between that and Treasuries. See if this continues to sell off. Well, is this happening? Let's see if it keeps the theme going. Just continue to dump down. Let's see. Wow, there we go. Let's see if this offer can stay strong here. As at the moment. Well, so we're already at 26s. I was thinking this is basically the TPO value area low. So if we can continue to hit down here, we're not too far away of the low of session, and overnight low as well. So if they really want to hit it, they break there, but we'll see. See how the 6k here. Let's see if this remains strong. They continually hit it. Let's see if this this dissipates here. 5s is nearly at the lows as well. Okay, so watch this 6k. We need to see this basically pull when they hit into it again. That'll let us know that this bid is a little bit weaker. Okay, so notice they tick 1 to test. Bid is not moved. Oh, yeah. So then they took the full amount and then reload the bids. Okay. 24.5 is the number then that we need to try and crack. Do you guys want to watch treasuries or would you rather watch indices? What do you prefer? Any preference? Because I'm aware we are, you know, it doesn't move around a lot. Okay, so we're kind of playing out what was expected. This is pretty much TPO low, and it's been the low of the RTH session is about 24s. So notice how they've hit into that, and then the offer's been pulled. Then they just reloaded the bid in our 2,000 contracts. You want to see they press in here and see how this 4K behaves. Oh, so you want to watch indices DOMs, Rob, or do you want to watch treasuries? They do this a lot though in treasuries, where they'll pull the offer, for example, a couple of ticks. Then they'll either absorb, but then you just hit in like this, you know. So they're drilling into the bid, and then they reload the offer, continue on, and then you're actually back down to this 6K price. You know, they do it quite a lot. They pull it a few ticks and then hit it. Terence, I mean, honestly, it really depends, dude. It really depends on what products you want to trade. Treasuries is so much slower, and I would say that you need to admit that you're wrong much quicker in treasuries, to be honest with you. You know, I mean, if it's in a range, you know, say it's in a 4 or 5 tick range, and you can maybe play the edges or whatever. It doesn't rotate as much. So, for example, you see ES will sweep overnight high and low a lot. Treasuries doesn't really do the same type of behavior. So what you'll find is if it takes the overnight low, they typically continue on for that session. And like if there's like a double distribution for the day, quite a lot of the time, the last few days have been pretty volatile in treasuries, to be honest, but when it's normally a double distribution day, they tend to protect the imbalance areas quite a lot. Well, I mean, it's famous last words. It's when treasuries goes, it goes, right? So it's like any market. It doesn't happen every day, of course. Sometimes you're literally staring. It's like watching paint dry. You know, where it's a 17 tick range. Typically, mostly happens on Monday, Tuesdays. And you know, when there is tier 1 data that comes out, it tends to be slightly more trendy per se. Like what I'm basically getting at is it doesn't, like, ES will hit it like, you know, 20 tick sweep below the lows, absorb and then lift it back into point of control. Treasuries don't do that. Like a sweep will maybe be a few ticks and then they'll bring it back. And quite a lot of the time, if they don't, like when they're hitting it past that pressure point and they drive it through, those are the times where if you're already in the position and you get a free look at it, you can, you know, sometimes it could just continue to run. So you need to break this 24.5 right now. And what you'd want to see is fives continue to pressing down as well. The long end of the curve is kind of, it's been, I mean, it's definitely trending down with the tens today, but it's been a little bit out of whack the last few days, which is not really normal. So they've pulled up 1,000 here. This does seem to be, you need them to hit like 1,000 or so here, and then see if this you know, pulls like 3K, and they'll just hit it. and they always turn on these super aggressive orders after 1 p.m. So the MBO data here is just, it's not like this normally. It's only after 1 p.m. they turn this on. Very typically when they turn these on, I'm normally done, to be honest. I've noticed as well, it swings and roundabouts like any market. No day's the same. It's like any product. Okay, so let's see if fives can take out nines here. This is the 5-year. If they can take this out, the offer continues to reload. Then we may get a little press to the lows. But at the moment it seems to be they're tapping in, bid remains strong. They're not reloading the offer enough. They're then just taking the full amount. And then there's a little bit of back and forth in these two prices. The 10s are doing the same. So they need to try and clear 24.5s, and same on the 5s. 30-year would also be nice if they continually hit down, but they've got a while to go yet. And there's always that sort of play that you can have where if the 30 and the ultra is lagging and these are hitting the lows into the B in line, then you may get a little bit more of a run. So there's maybe some more risk to reward on the table for that, but that is saying if they're going to ultimately continually challenge the lows. If they don't and they absorb here and then they probably lift it back up into like 27s, you'll probably see the 30s and the ultra probably work its way back up to VWAP, which is the pink line. Brian, I do sometimes, mate. Not that often. The only real ultra bond trade I have in my arsenal is if it's extremely lagging. It's just as an example, say 30s, 10s and 5s is just pressing the highs. Ultra is say maybe 4 or 5 ticks behind or something, give or take. The offer is looking extremely weak. I'll maybe then try and basically bid the ultra back into parity to see if we can get a hit of the highs, but that doesn't happen that often. The main trades that I take is on the 10s and on the 30, predominantly on the 10-year. And the reason as well why the most is done on the 10s is because if you're wrong, typically you maybe get a revisit of the price. So what I mean by that is, say for example you're buying here, right? And then they'll just pull the bid and you get filled, and then they reload the offer, hit in, and then 7s dissipates, right? This 7k here. Typically you'll maybe be able to go out for a tick or scratch, whereas if that happens on the ultra, it's sometimes it's hard to get filled, man. You normally need to get out with a stop rather than manage the trade. Like, I'm pretty sure Rob trades treasuries as well, and sometimes say you get in a trade and you're 3-4 ticks against you and you're like, alright, shit, I'll just cover here. Then you try and get out so that you're saving a tick, and you just never get filled. So you end up having to take market and then take an extra tick loss. So that's one of the reasons. But the tick to commission ratio is far better in the 30s and the ultra. It's definitely the better one. So they do. The thing is, they don't really tend to they don't really, how do I explain this? So they don't get pulled the same. Very typically they'll actually trade through them. But the reason why I tend to finish at 1 p.m. is because when they put these out, especially on the 10-year, unless it's like extremely one directional, which the last couple of days has been some quite good opportunities, but a lot of the time it's not. This is typically what happens after 1 p.m. You know, you're seeing 6,000 here absorbed in the offer, they're hitting into the bid stays strong. It's just, you know, this is just Q position algo territory where, you know, Q positioning is extremely important in treasuries, because sometimes if you lay out a bid, right, say for example you're like, right, I want to try and get filled here, okay, so you lay out a bid here, now you're right at the back of the queue, you're 1389 in the queue, right? You don't know that a lot of these orders are not fake here, right? So when they hit into it and some actual sell pressure comes in, what you'll notice is they'll just, like 600 will just cancel, and then you're left with your dick in your hands, getting filled as they go right through you. Do you know? So I think over time in treasuries you'll kind of realise that when you want to go in, you kind of need to do it as they take a price. So say for example you're looking to get short here, right? You either need to, in my opinion, I would never just go and hit market right now, because then you're instantly offside one tick. You could just lift this and then you're reload the bid, and then before you know it you're 2 ticks down. You're just asking to get smoked. So in order to enter in treasuries, you know, I would wait until, say for example, to take this full amount, and as I see them doing that and I want to be short, I'll instantly try and get filled here, because then normally they're going to reload the offer, and then we'll see if they print into 24s, and then see how that bid behaves. Does that make sense? Because it's not like in indices where you put an order out, you get filled regardless. Like in treasuries, I had it yesterday, which was extremely annoying. The ranges were quite large yesterday. I get stopped out at a literal tick of the low, and then it went massively bid. It then came back down, and I was basically bidding, and it went up like 10 ticks in 15-20 minutes or something, and I literally didn't get filled, which was extremely frustrating. But this is the reason why I don't stream treasuries, because look at this, we've been here now for like 5 minutes and it's not moved. So what we'll potentially find now is whoever bursts through here will maybe get a move. We'll maybe get something down here to fill out these orders. We need to see if this 24s is going to pull. Maybe fill these out down here, and then probably work our way back into like maybe 27s or something. We'll see. But the 5s might give an idea, but it's kind of doing the same at the moment. So, but yeah, let's jump back into indices and we'll see what's happening. So we've had a little bit of a sell-off. You can see a completely different market, right? You know, you can literally lay out a limit and you get filled no problem. Do you know what I mean? It's completely different. It's just like depth of market, and it's like depth of market sped up, to be honest. If I get enough time, I'm definitely going to maybe look into some Eurex products at some point, but I'll need to completely then change my schedule, and I don't really want to trade 2 sessions. So sometimes, mate, but I don't. That's a good question. So I'll normally add like straight away. But I would say that the majority of my trading is done where I just get in one clip, to be honest. Because then again, you're back to the same scenario of it's quite hard to get filled. Well, it's not hard to get filled. That's the wrong way to say it. It's hard to get filled optimally. Put it that way, right? And I'm relatively cheap where I don't really like to pay up. I don't really like to lift the offer. You know what I mean? I, I certainly don't have enough money behind me to lift an offer in in the 10-year, that's for sure. You know, my 10 or so contracts doesn't do anything. And very, very typically, I'll have an idea before the trades. You know, am I going to potentially run this one? You know, or are we in a relatively tighter range? You know, and I'll maybe only look to take a couple of ticks out of it, to be honest. But I do find that when a trade is going against you sometimes, it's quite hard to get out of limit, to be honest. Because then you run the risk of not getting filled and then it's another tick against you. I'm not really a big advocate of the scaling in per se, to be honest. Okay, so we need to break. What price is this? 83 and a quarter. Let's mark that. Okay, so 83 and a quarter. It's fucking miles away. These are all these lines from yesterday. Let's clear this. Okay. So sellers need to clear here, and then they've got the initial balance as well to break through, and then POC. And we're now just basically back in value. All this orders are still up here. Hey Samir, yeah I do. I trade from about 7 a.m. US time. What would it be, New York time? Till normally about 12, basically to lunch, to 1 p.m. And very, very typically, if I'm trading after 1 p.m, I've had a shit day, to be honest. So I just kind of have a rule now that as soon as they turn on those algos on 10s, I try to just make sure at least turn to sim or something. And to be fair, that's like 6 p.m. at night for me, so I'm normally pretty tired. Trader boy, nice. To be honest with you, the reason, like, I'm relatively simplistic, right? I think if you've got some size on, I kind of like the scaling out side, where you maybe take a little bit off the table. I can get behind that. But the scaling, it just adds a whole layer of complexity into your shit. You know, do you do it all the time? Do you not? You know, and the trouble is, if you end up scaling in and you've got a tendency to add to positions, well, do you only add to winners, or what about losers? What do you do there? Do you know what I mean? I think you need to be extremely like disciplined with your rules around it. I just find it all pretty challenging, to be honest. So I'm a fan of, you know, if you can get in with your whole clip, then do it. Have an idea if you're looking to run the trade. You know, maybe if you're looking to run it, you know, take some off at a level and then let the rest run. But if my plan of attack is to only take 3 or 4 ticks out of the trade, I'm not doing any form of scaling out and I'm not doing any form of scaling in, to be honest. Exactly. And the trouble is, as soon as you have this scale in mentality, this is just my opinion, right? I'm pretty sure some people can scale in and it works really, really well. But for the majority of people, they don't really have any real rules around it, and they also don't really have the knowledge of it trading or the experience. So they end up saying, right, I'm just going to scale into positions. So they scale in, and it goes against me, scale in again, and then before they know it, they're, you know, balls deep at full clip in the worst positions. That's the risk. So you just need to be careful of that. Yeah, you're the same, Rob. To be honest, I don't know, man. It's too. How do you even journal it as well? Like, it's just, I don't know. I actually feel over my career in trading, anytime I scale into positions is normally when I shouldn't be, to be honest with you. Um, yeah, I don't know. The only thing I can get behind, but you need to be extremely meticulous about it, is you scale in half your clip, you don't add to the loser, so you're only taking half on a loser, and then you need to scale into the winner, right? But honestly, it's just, I've never been able to do it. I find it pretty challenging, and especially when it's in bonds as well, where, as I've said, it's quite difficult to get filled optimally, because if you go at the back of the queue, those algos will just pull your orders and you get filled as they go through you, but you're left with your dick in your hands at a shit price. You're not wanting to be hitting market, because then you're instantly one tick against you, and then if they pull on the other side, then you're 2 ticks against you. Do you know what I mean? So that's not the way to do it either. So yeah, does that make what would be interesting, Rob? Do you see the same there on that? You know, when you're trading treasuries, I kind of feel maybe I'm just a cheapskate and I don't ever want to pay up on a price. But you know, I just hate the idea of, you know, say like there's 200 in the offer and like 3k on the bid, and you're thinking, right, man, they should definitely take out this 300, and then you lift into the offer, right, and you'll maybe take 10 of it, so it's 290 left. And then as you do that, they'll reload the offer to like 2k, and then they'll hit into the bid, pull the bid, and before you know it, you're down 2 ticks. Do you know what I mean? It sucks. So I've been caught out with that many times in the past. So now I would rather wait until in that same scenario, I would rather wait until they take the full 300, right? And then I'll quickly try and get filled quick on the bid there. You know, because typically they'll hit into that, and then I can then maybe get filled, you know. Hopefully that makes sense. It's kind of hard to explain. Let me know if you get any questions about that. To be perfectly honest with you, I don't really enter market ever. Like even on indices, I've always just been like, right, I want to get filled at say 92s. I'll just put it out in the bed or something. Yeah. No, exactly, Rob. It's complete different markets have different personalities, have different ways you need to sort of treat them. To be honest. And this is another thing as well, is some people when they start off to go with micros is hard to scalp because the commissions are really high. And the trouble is, say you go in with one micro and you're like, right, okay, I'm down 20 ticks, right? And you're like, well, I'm only down $20 or something. I'll just add. You know what I mean? And it reinforces that habit. Whereas you should just be going with your full clip in general. This is the thing, is no one really talks about this type of stuff, to be honest, because you go into other joints and they're just like, I'm trading on sim as well, so I just go and blast 20 lots on NQ. Do you know what I mean? I mean, jeez, live market trading 20 lots in NQ. I've not got a stomach for that. Jeez, look at, crazy. It would be quite hard to get filled as well. Or when you lay out your 20 lot on the DOM, you're literally just, it's like a pig going to the slaughter. You're like, oh, let me buy here, and then before you know it, they just gobble it, and you're down 20 ticks. Yeah, so what exactly do you mean by quick fills? No, so I, you've really in treasuries. There's never really a time where I'm going to enter at market. To be honest, it just doesn't happen. I'll either be joining the queue at the end, or I'll try and be smart about it and try and like almost jump the queue and then hope that they're going to like basically load up behind me. To be honest, that's pretty much what I'm saying for the quicker fill, as such. That's really it. Or the other option is a join the queue. Uh, you know. Yeah, exactly. I actually had a great short earlier. Let me just bring it up actually, so we can discuss it. So it's not moved. Power of treasuries. So I was short. I had a really good trade earlier actually. I was short from, I think it was 05, halves here and evens, right? And I was like, okay, I was short bias on it. and I'm thinking, right, we can maybe try and target down to like 26s was the level, right? So a fairly decent move, man, like 10 to 12 ticks or something. Which is a great move, by the way. I wish I got that every day. I would be in the Bahamas. And we got down to the value area low, and they just continued stacking the bids. There was like, they were drilling into it, and then they just kept on adding and adding, and it was like maybe 20 minutes or so before the bond auction, and I was like, I'm getting out here, because when there's that much, when someone is stepping up and holding it that much, granted there is a side where when they do take that iceberg, typically you'll go another few ticks below it. But a lot of the time, if someone's stepping up, that can be the guys that were net short with you to try and get it down here. That could be them just stepping up to get out of their position. Then before you know it, they'll just lift into the offer, and then they'll do the same thing that we discuss all the time, where they'll just, you're then against you 3-4 ticks. So it's better to be safe than sorry, I think, in treasuries. Daniel, can you explain what you mean by the quick fill side? I'm not really too familiar with the Northern dude's work, to be honest. Quick fill is not scalping. Yeah, to be honest, great ranges today. And that was you come out, and that was 15 minutes after the data, and your bias was short, and then right. What price was that at, Rob? What do you have a rough idea? Because I think at the lows it got down to maybe 24s or something. Was that the low? The news came out. We went bid originally, then dumped, and then was that 24s? Yeah, it was, and then we went bid back up, right? How does that? So I'd be interested to know, right? In complete honesty, right? How the heck is any retail person market making on in this type of condition? Do you know what I mean? Like seriously, there's no danger anyone can say that they can, market make this or whatever, right? And I'm not speaking out of turn here. There's no danger that you can say, right, I'm going to quickly get filled here. Do you know? Especially on ES as well. I think his method, correct me if I'm wrong, would have made much more sense when the book was thicker. This is the reason why I've transitioned to thicker books. Because ES is a joke at the moment. So can you guys explain to me how he's doing that in ES when the book is so thin? I'm kind of like, and is he not a big fan of bookmap as well? Because I'm failing to understand the concept of how you can get quick fills when there's 40 on the bid and it pulls in a second. Like you literally don't have enough time. You just need to lay out your bid and just hope that you get filled, and then see how it goes. With your bias, what's happening, right? With the type of plays that we discuss on the stream, but. Oh, he was, Rob. I see. Yeah, I mean, the depth of market looks pretty responsive actually. It definitely looks one of the quicker ones if you look at that comparison. Amzi, how's it going, dude? So this is the thing, Daniel. I mean, I always try and remain as objective as possible. They're just hitting this at the moment. But I can't. I honestly, when the book is this thin on ES, um, really you need to think about the market in a different way. You need to think of what's happening with distribution, what's happening with delta. You know, where is people net long and net short from? Where are they going to drive price to? And then is there a chance that I can go with it, or basically fade back in once they've taken some profits and working the other side? But is for like scalping ES where you can read the inside prints and stuff, because you can do that in bonds. You can really read the inside prints, gives you a massive edge. You can literally see with your eyes. There'll be say it's 4K bid, 4K offered. They'll maybe print 200 into the offer and then 2,000 they'll cancel, so you know that the offer is relatively weak, right? You don't get to see that in indices because the book is that thin. You physically can't see it anymore. All these things I think work better when ES was 400, 500 bid. Amzi, what is TWAP? Time weighted average price? I've heard of anchored VWAP. What's TWAP? Yeah, exactly. But I don't know. It would be interesting to actually see when the market is this thin how he's how he's doing that. Because in essence, yes, it does sound like he's market making to go for 2 and 3 ticks at a time. But if I'm honest with you, these methods in this day and age, and when the book is this thin, you very typically, if you're going for 3 ticks, you're going to have a skewed risk to reward. You know what I mean? Because very easily, if you just buy right now and have a 3 tick stop and a 3 tick target, you might as well just toss a coin, honestly. What is TWAP though? Are you just talking about VWAP, volume weighted average price? This here, and then this is the standard deviation bands. Are we referring to the same thing here? I don't know, Daniel. I need to see that. That would be really interesting to watch over a large trade sample. Um, with how this book is at the moment, going at market with bracket orders for 3 ticks stop and 3 tick target with 80% win rate, you need to have something extremely specific. Is it only going to be when icebergs are triggered? Is it only going to be in imbalances where you're doing it? Are you doing high volume nodes? Because with the book being so thin at the moment, it's not like you can. There has to be something else around that, right? Yeah, JP. So the book was basically much thicker. Since COVID, it's basically just gone. I mean, this is I, so clearly volatility is much higher. Typically, I'm assuming the VIX is higher right now. Very simply, when this happens, the book is much thinner. So look at this. You're seeing now that look, like 8 ticks. There's hardly anything there in each price. So if any large size comes in now, it just moves the market like 3-4 ticks. This is just not my. I don't know. I just find it extreme much harder. Well, look how bouncy ES is. I still find it hard to believe that this is the top 500 US stocks in the world, and this is all it's waiting at each price. It has to have been collectively almost agreed by the large market making firms that this is just what they're going to do. They now break their orders down a lot more, so there's not as much size, they reduce margin, and they ultimately reduce the risk. And they've probably just never changed since COVID, to be honest. Amzi, are you referring to VWAP and Wax? No, I'm not in a position at the moment, dude. Time weighted, sorry. Time weighted average price. I've never used that, no. Yeah, exactly. I mean, CFDs are completely different. I suppose they're only really for Europe and UK, where I suppose those markets are going to those products. Um, I suppose you could say it's. I never really thought about it like that, but the fact that it is higher the price now, but the trouble is, it's very much one of the large firms does it, and then for a week the other firm loses tons of money, and then they think, shit, let's review it. What are these guys doing now? And then they all do it. You know. So really, you're going to need something to change in order for that to happen. This probably today is not a great way to discuss it because look at the book. It's 30. It's crazy. I mean, if we bring up gold is got a thicker book right now than the S&P. Yeah, exactly, JP. That's the thing now that is basically the order sophistication. There was a great example in yesterday's stream where pretty much every single tick below that low was almost an iceberg order. I mean, I'm exaggerating ever so slightly with every tick, but a vast majority of them, were. But you're right in what you're saying that they now can lay out 70 here, not show their hand, but then when 70 gets taken, they they continually reload the bid and just take all of the selling that's there, right? This is actually what it's like in pre-market. This bid and offer right now. And the reason being is it's very hard. What is extremely hard when the market is like this? Where yesterday, iceberg orders were like 300 and 400 contracts, right? Book was maybe 100 deep at least, give or take, right? And then the literal next day, it's half of them. There's not many people that can adapt in trading to them. Like, Wednesday it's this. This is the thresholds. Thursday it's then 50% of that. Do you know what I mean? Forget people that don't even use order flow or anything. I mean, everything has basically been chopped. I mean, I was watching stuff from years ago as well. Like Eurex stocks 50 was like 1,500 bid and offer. I think Rob, did you say that's like 400-500 at the minute? So we'll see where is this the yeah. So we're just at point of control for the session. This is probably just going to change 19k for the whole day. Yeah, a little bit away, so 5k from this price to take the whole day, but this is the regular trading hours point of control we're at the minute. But anyway, you guys hear me harping on about how thin this book is, all the time. It's just different. I think when the book is this thin, you need to reduce your risk, in my opinion. You need to have a slightly wider stop and wider target, to be honest, but reduce your risk. Like that, for example, it's just sweeping through. I just can't see when the book is like this how you can just put out a bidder offer and take 3 ticks, to be honest. So 87s here, some tons of selling. Let's see if they can hold 87s. Let's clear these prints. It's very, very jumpy. See, that would be my sort of point there. So they go back up to 87, you think they'll hold, and then they go above it like 4 ticks. And then we're sort of going. But there was nothing really there in the order flow. I mean, you had what, a couple hundred contracts absorbed in the offer there, and then they just ram it back up. Honestly, seriously, man, this is tough conditions. No, Daniel, it does not have momentum tails. But I suppose they would work really good when the market is like this, wouldn't it? With NQ and ES, to be honest. I see what you mean. I see what you mean with that, dude. I think the thinner books, that kind of helps. It's like an extra visual, right? Because I really look, like, I rely on the inside prints and the bid and offer a lot in my order flow analysis. And when it's this thin and it moves around that quickly, I find the edge for me gets diminished, to be honest. Which is predominantly why I don't trade NQ. I have a feeling that when they're going to move through the market here, and it's like this, when it's this thin, they can just pull the bids. So, say for example, they wanted to get filled at 85s, and they're layering, because we know market maker firms are layering every price. You know, they could just pull the bids, and before you know it, they're sweeping down like 5 ticks, and then they hold it. Like that. Exactly like that. They just pull the bid. Because actually they want to get filled at 85, so they pull it, to get some orders done, and then lift into the offer. See how strong the offer is going to be. Rob, is there one for that? How does that work? If you've got a link to that, if you could pop it in Discord for me, dude, just to see. I think I've seen something like that before. NQ is the sexy beast. Yeah, NQ if you want a heart attack. This is wild. Yeah, Rob. Yeah. So I've checked out a few of his things. I think they're a little slightly bit outdated now. Um, in the past, I can't exactly remember how we did it. I'll need to have a look at it again. If you've got a video or a description of how to do it, mate, I'll give it a crack. Would be interesting to see. It's not really relevant for treasuries, of course, but would be for these kind of markets. It would be interesting to see if it gives you an extra visual, because I'm not used to the book being this thin. So I'd imagine a visual where you're seeing the sweeps would be a little bit easier, because you're having to rely on slightly different tools when the market is this thin. Because they're going to absorb now probably over 2 points when the market's this thin now. What's all you trade, dude? Jeez, oh. Do you trade order flow with that, or do you use the footprint, or or do you day trade? So there's an iceberg there. The 82s just absolutely cracks right through it. It's crazy that I'm calling an iceberg 200 contracts, but If you could draw, that'd be great. I mean, this is the thing. It's not really going to be relevant for bonds, mate. But I would like to. I'd like to see. So this, you can see here that there's some icebergs going on, right? You know, that's fairly obvious. And if they do crack through it, then it'll bleed down like 4 ticks. So someone is holding the market there at 80s, right? We can see that. But everything else in between it, when it's this thin, is quite challenging. So let's see now, second attempt at it. See if they're still going to hold it. There is a bit of negative delta coming in. Right, so they broke through that level. Let's see if they hold 80s now. Or a few ticks above it anyway. Offer is still pretty strong there as well. Nice, a little bit of two-way. It's not 30 contracts trading. Have you got the same up there, Daniel? I take it you've got momentum tails going and you're basically describing what you're seeing. So they did hold, you know, we'll call it 80 to 81s. Now let's see if they can hit into the bid and break below 78s. It should go pretty quickly, you would think, if they can hit it. Here we go. Yep. See if they can break through this. It should go again. Yep. When you get through these, when the icebergs are not as big, you know, and they're drilling through them like this, when they tend to break, it tends to get you a nice little 4 or 5 tick pop-a-roo. Wax, I'm assuming you mean what I use for the bubbles. Is that what you're meaning? Sorry? Can you reword that for me, please? Ah, right. Okay. So the bubbles is in essence orders in one clip that are greater than 200 contracts. In one clip, that is. Not combined. So let's see now if we're just going to now pull the offer. Now they've drilled it down here, pull the offer and work our way back up to VWAP. See if they do that. Or we're just we're gonna hit. So we've broke the previous day close. Now at initial balance. If this continues, it could go very quickly. Jeez, they are hitting this, aren't they? Approaching value area low, so we've got this higher volume node coming up here at 65s, which actually is going to be POC. So let's see how the market responds down here. I'd be very, very, very surprised if we smash right through here without chopping around for 5 minutes. As iceberg, no, it's not really an iceberg. It's just to show me a visual where large orders have printed. Icebergs I just watch for the DOM, to be honest. Don't have any triggers. And to be perfectly honest with you, I feel in these type of market conditions, when it's like it, an iceberg is not as important as when it's slower. I actually think when the market is like this, and if it's a smaller iceberg, they'll typically, when they bang through it, it'll typically go through it. Okay, so 71s, 72s being the high, and then they're pulling in between. See if they can break below, but we have got support at the daily POC so far in this high volume node down here. So sellers need to continue crack that. Buyers need to try and get above 72s. Yeah, so just pulling right in between, like an 8-tick pull in these prices, and absorbing here, probably going to be down here as well. If you guys can hit the like button for me, let me get out the pen. I don't know if you've got any other questions, Wax. Okay, so we have this level here. Buyers need to take control. We look to be basically just pulling orders in this sort of range, as you can see. And then on the bid side, we seem to be absorbing here, but then there is support, so let's see if they can bang through it. Yeah, so basically there's correlations in there, right? That you need to take into account. So this is NQ, the Russell, and the Dow. So the next level is, let's see how the, it's a bit of a big, let me try that again. Okay, so we want to see how the sort of control, like here. So they seem to be absorbing here on the bid, which you can see there's 400 there absorbed in the bid. If they do crack it, then we'll probably see the market hit down to POC, then bounce back up. And if we do get back up through these, then we see the offer pulled and then dance around back. definitely some size going on at this 60s here. Sellers are definitely keeping their foot in the gas here, aren't they? Problem is I can't now recenter the DOMs, which is annoying. If we could go back up so I don't need to recenter, that would be handy. It just seems to be continuously hitting in here, doesn't it? Like the offer has been pulled, then they're hitting in. Eunice, how's it going, dude? How is it going? Yes, it's like my worst nightmare at the minute. Okay, so let's see if they can punch below here. They do continue, just seem to be lifting offer. Then they'll hit in and drive it back down a little bit. It's going alright, dude. Had a pretty good day today in Treasuries. Had to fight for it, but nothing new there. No problem, Wax. We can do that. There's a playlist on the description of this video that covers a lot of that stuff, man. I would say it is definitely harder to read the DOM. You almost need to block off certain points, like right now as to what I'm doing. So they did pull through these prices before, so let's see if they continue to do it again, or if they're pulling it up and then we hit into the bid and back down to POC. But they do need some profit taking from all this selling that's happened. But note how the buying that's coming in right now. Nice, buddy boy. You had a good day at Treasuries. Nice. Wax, there's a lot on the description of this video, this live. There's a playlist. I don't know if you watched all the videos. We cover quite a lot of different. We cover Treasuries. We cover some order flow as an example. You'll find in there. There's loads of stuff. The buyers again still need to get above 72s. So we seem to be capping in this range at the minute. What did you trade, Alex? Did you trade, is it a 10s, 30, Ultra? I'm hoping that we get some real movement considering the book is that thin as well. So we need to get below this high volume node, and if we do, then it could be pretty quick. If we can get break here with some size, we could move down here pretty quickly and challenge the lows. Could be on the table. Yeah, exactly, Eunice. Honestly, I find footprint works extremely well after the fact. Just because it's only market orders. And you'll find that for the current, uh, as the candle or print is forming, it can change. So you kind of need to wait till the imbalances are put in and then reference them. Nice. Do you watch the other ones for correlations, dude? I couldn't trade treasuries without having like the fives up and the 30s and stuff. Ultra not so important, but sometimes it can give some clues. Mostly the 5, 10 and 30 though. Problem for you is staying in a trade. I've used the crude when moves are quick, but in 10 you enter, then it goes, let's say, to takes in your favour, and then stops. There's just the next step, adding in rest of the curve. Yeah, exactly. I mean, there you probably go. So if you're, how do I explain this? So the tens is much thicker. The tens seems to have slightly more. Wow, we're just going now. Huh? The tens will revisit more prices. You'll notice that they'll pull the offer ever so slightly. They'll tick a few ticks up to the offer. Then they'll take out the full bid, for example. Now, what can give you a clue to that is the 5-year is already gone offered, and the 30-year might have done the same. Whereas the tens is just having some two-way just because it's more thick, it's thicker, for example. And I would say you need to, before you take the trade, you probably need to have an idea that are you going to run it or are you not, and just be cool with that decision. Because it's very hard in a trade to just say, fuck it, I'm going to run this one. Do you know what I mean? Very typically, if you make that decision when you're if you do that when you're in the trade, you just Sod's law, it'll end up coming back, and you'll probably end up taking a couple of tick loss or something. So stick with your decision before you're in the trade, and just go with it. And what are you using as your hard stop amount? This ES is fucking wild. I literally have just finished a sentence and we've moved 20 ticks. Oh wow, look, 130 lot. Sellers just gobbled that. Now you're saying that. Let me see. Did the 10s just reverse back in, or what happened there? Oh no, we pulled in a little bit and then we're back at 25s. Okay. Look at that, 27,000. Oh god, thank goodness I never trade at this time. It's so pointless. 27,000 to move at a tick. Oh. Yeah, and everyone always used to use the ES for correlations as well for the bonds, but I tend to think that doesn't really work either now. See more Justin. Oh, geez, yeah. I mean, going from oil to treasuries, mate, it's completely different. Chalk and cheese. I mean, seriously, how are you getting filled in this? 10,000. Oh gosh, crazy, crazy. Let's jump off that. Nothing exciting happening there. Hello, market maker. How's it going, dude? Yes, I'm using MBO. So Denali data feeds that I use, I run an instance for prop and an instance for my personal accounts. I don't copy them all. Pig, how did you go on? What did you trade today, dude? What individual equities did you have in store for us today? So Alex, I need to read that. So you said definitely need some more adjustment after oil, but I can see the positives. It's very difficult for me to add size in oil because of volatility. Treasuries is weak hammer. Well, that's pretty much the the attraction is you can read the inside prints. It doesn't move 20 ticks in a second, but it has completely different characteristics. It's extremely susceptible to the yield curve. Obviously, it works inverse. The futures market's extremely basically it just moves with the anything that the Fed says regarding inflation. Inflation is like the worst thing for the bond market. So you just need to take it all into consideration. Different side, and when you, as Robert just said there, the fact that the bid is that thick, even if you wanted to trade the 10-year right now, you can't. Like seriously, there's 10,000 contracts. If you go and lay out a bid right now or an offer, you're 10,000. So all that's going to happen there is 10,000 will pull, and you're left with your dick in your hands getting filled at a shit price. And there will be some poor smuck out there, right? That doesn't trade order flow and will just be buying at market in bonds or something right now. Like there will be people out there that will do that. Lots of things. What's the break even? You got Nvidia short. Is that the first 45 minutes you're done? I just wished I'd known that. You just wish you'd known what? That you'd been done after 45 minutes, or just to play the Nvidia short? So we're seeing this buying coming in here that has been absorbed at the minute. Yeah, it's 20. It needs 20k to move a fucking tick. It's crazy. But there will be people out there that don't know that, and they hear bonds trend a lot, and they'll just, I don't know, buy something, or sell or whatever, and they look at bonds and they're like, oh, it doesn't move. So very typically, when they turn on those algos at 1 p.m., like after lunch, it's not normally like that, but it's something to that effect, and I'm then done for the session. What's the point? Russia's bonds is the sort of first in, first out. So one lot queue, you in the front, one lot get filled first. Well, you can have estimated queue position. Of course, it's estimated, right? And we discussed this earlier, Alex, that queue positioning is important in general, but it's extremely important in treasuries, which is why these firms just layer, say it's 4k a piece in regular trading hours. They'll just layer that at every price. It doesn't mean any of them are real, but they do it because when the market comes in, they can see how strong the bid and offer is and what the order flow is like, and it allows them to then get the best price, and they can constantly, rebid, reoffer continuously. So you really need to watch the inside prints, and actually it's probably a good idea to explain this because the market's not moving at the minute. Right, let me explain this to see what I mean. Oh wow, it's not 10k anymore. Holy smokes! So what I was meaning by this, right, is so they can see they're lifting in to this price, okay, and they're also hitting into the bid. The bid has 5,000. We'll just round it, okay? 5,000 here, and we'll call it 4k here, okay? You can see that they're layering 9k here, 7, 7, 6, 7. These orders down here are probably not real, okay? So there was 9k there a second ago, so they hit in 1, right? You want to see if they go back up here and if this stays strong, and you want to see if they've hit like 500 in here. Do they pull, thousands of contracts? So note this. Be a good talking point if they do that, because it's actually trying to be what I'm explaining. I hope they don't just take the full offer here and then reload the bid and then back to this again. They do. Come on, treasuries, I'm trying to explain something and you're not giving me the example. So anyways, let me continue on. So there's 8k here, 7k here, right? The concept is, okay, so they take the 4k, they hit 500 say in here, and then this 8,000 will just cancel off. It will, like 3k will disappear, right? But then I've noticed that with this MBO order, they do this, okay, to then test the strength of the bid, okay, for if anyone's going to buy it, and see if they hit in here. This is essentially what you really need to pay attention to in treasuries. So the concepts of this, you're seeing it on the 5-year, the 10-year, and then you're watching the 30-year as well, okay? So when the market's moving normally, they're constantly rebidding, reoffering. The market is moving continuously, and you want to see how these prices react, because if you can anticipate that they're going to crack these lows and you get filled and they take this price, very typically there'll maybe be some stops down below here, and then these orders will just cancel off, and they're the types of trades that if you get a look at it, you can get it to run. Simply say Q. Yeah, Q positioning, yeah. Yeah. I'm not too sure how I could explain that in any other way. Okay, so fives is just taking this full amount and then when offered, they're then hitting into the bid. Okay, 700 has been pulled. Oh, so you want to see if they take this and then see how this reacts. I've just not been paying attention to see if that went down a tick or not. I thought they just pulled all of those contracts. But this is pretty much what Treasuries exists of. What's happening across the board. You need to pay attention to what these orders are. When they're hitting into them, are they being pulled? Are you going to go for a run of the lows? Or are you going to look to try and see if someone's going to step up and then you're going to be buying and taking it back up into at least, you know, the value area low or something along those lines? Yeah, pig. Like you're waiting in a queue. So that's obviously this is completely different characteristics to ES, right? So when it's normal market conditions, you need to watch that. Okay, I'm trying to see if we can get an actual example. It'd be nice if the 10-year could do it. To see. So they should just be taking this full amount. It was 700, but then they've just reloaded another 2,000 contracts or so on top of that. See how they're constantly pulling and adding continuously? There's now 5,000 there. Okay, in theory, the 5 should be taking that out. See if you take the full 700, normally they would, and then they would go offered and reload. Let's see how that goes over here. Usually thought that Q position was like one of the Greeks, like a letter referring to. No, not at all. Not at all. When you see it like this, you know how important Q positioning is, right? Because if you go in and buy, you're literally going to the back of the queue. And if someone then takes this full amount, they're instantly going to take it to the next one and you're down a tick. So you would almost be better seeing if they can take the full 6k and then quickly bid. And you're never going to be as quick as the algos, of course, but you'll maybe, you know, you're not going to be last in the queue, put it that way. So hopefully I've explained that in the right way instead of butchering it, but ES is not doing very much either. Yeah, I think so. I can't think of... If you're referring to it as one of the Greeks or whatever, I mean... I suppose if you've never looked at the depth of market before, you wouldn't really think about Q positioning, to be honest. Pretty much, Pig. I mean, you know, you're not going to want to join the back of the queue, right? When someone takes the whole amount, or say what will happen is say there's 6,000 in the bid, they hit 3k. So say for example the 6,000 on the bid, right, and you put out an order to buy. So you're now 6,001, right? Now you need 6,001 contracts filled, so someone needs to sell into that in order for you to get filled. 6,000 of them. So what will very often happen in that scenario is when they sell into that, they'll maybe sell 3k, right? And the other 3,000 will cancel, right? That'll just cancel off, and then you'll get filled, but actually 3k was not real, and then before you know it, you're down a tick or so. So you just need to be careful on that, and that's probably the reason why you shouldn't be. When the book is that thick at this time, it doesn't move, so there's no point trading. Ah, okay, right. So, because bear in mind, right? Like regardless of what, if you say these orders were real, right? These 200 lots. If you had the margin in your account with your broker, you could go up right now and put 100 lots here. You would join the queue. Everyone would see that. Someone just did this here. Let's put 100 lot out. Let's see if they cancel it. See if it's a classic spoof or if they do get traded on it. Let's see. Nope, they do get traded. And then I've put 100 lot here. Traded as well. And that's pretty much it. So you join the queue. It's a good example of it. So that's where, you know, going in like really fast markets like NQ and say you put out a 20 lot, you're almost. There's a reason why these large firms now break down their orders, right? It's not show their hand. So if you're just going to go out and show your hand like that, you're kind of just saying, hey, come and take me. You know what I mean? Am I making sense? Let me know if that makes sense, dude. You kind of need to watch the DOM for like a month so you can understand. Just putting a link here into the coffee. Do you break orders down? No. I'm not moving enough size to even bother breaking orders down. I think you know, this is why these large firms say put yourself in like JP Morgan's shoes or something right now, right? And you get a call from one of your clients, and just for talking sake, they're like, right, we want to execute 2,000 or 3,000 contracts, okay? What would you do? You're not just going to go onto the DOM and just be like, ah, right, 2,000 contracts, I'll just place them here. Do you know what I mean? You're not going to do that. You're going to probably spread it across, see what the best price is, and of course you've already quoted them a price so you make money, so you need to try and execute them smartly. And with the sophistication of orders these days, there's icebergs that are behind it, so, and you've got no idea where the iceberg is going to be, you just need to spot them. So what I mean by that is, say for example, there's 80, we'll just call it 80 here because there's 100, right? So if 100 trades here, they'll maybe say in their order specifications, they'll be like, right, if 100 gets taken, continually reload until 400 contracts are taken, for example. Does that make sense? They're not going to show out their full 400 contracts or 2,000 in that example. They're not just going to lay that out, because then you're letting everyone know what your intentions are. No one's going to do that. I don't know. I've never seen any of that knockout. It would be interesting to see what your thoughts are. I just don't know how someone can maybe in a slightly thicker market with ES, but when the market is pulling all the time like this, um, I think it's harder. And I think if you're only going for the 3 ticks, your reward is going to be pretty skewed. That would just be my initial thoughts on it. Exactly, Pig. Exactly. So it's a renewing order because you're not gonna. It's kind of like common sense, right? You're not going to show the rest of the world that you've got thousands of contracts to execute at a price. You want to keep that hidden because then people can abuse your order. For example, they can front run you, they can take your liquidity, they could drive price to it because they know most likely the market's going to stop there. You know what I mean? Just opens up a whole level of abuse. Yeah, I don't know, mate. I need to see it in action, to be honest with you. I kind of think going for 3 ticks and stuff works in treasuries, 100%. That's like my kind of bread and butter. 3, 4 ticks, standard range trade. Works great. But tick to commission ratio is in your favour and it's a thicker market. How you can just name a price and say, I'm going to get 3 ticks here, with the commissions being pretty high, I just don't. I don't know. I can't see how there's an edge there for that, if I'm honest. When you're doing that, and you're needing to trade, I don't know how many times is he taking trading a day, like 10, 20 times or something. You need to have extremely good commissions. You probably need to have a seat with the exchanges, and you're then competing with the algos. To be honest with you, and you're never going to beat them. It's no chance. I don't know. Trying to not be completely blunt about it and and give it a shot, but I don't see how when the market is this thin that you can like just toss a coin, heads is long, tails is short. How that's going to improve anything? Maybe that's a bit harsh, but yeah. If he said that and it was treasuries, you know, where everything is in your favour for scalping, then 100%. Thank you, Robbie boy. Much appreciated, my friend. Hopefully you have a great evening, dude, and we'll catch up tomorrow, man. Thank you very much for the coffee, dude. Yeah, I'm probably a bit harsh there, Daniel, but I think that just going for three ticks at a time, you need to be trading quite some size, and it is certainly difficult. I would almost say it would be easier to trade less and to take 10 to 15 ticks, to be honest. especially when the market's like this. To be able to name a price, trade less frequently, and go for 10 to 15. I think the 3 ticks is mainly the problem. Nice. I've never really watched anything. I think I've seen his name thrown around a lot in the book map thing. Um, I think, as you said earlier, I think Bookmap's DOM is pretty good, but I'm just not a major fan uh, of the bubbles and stuff like that. Even though I've got bubbles here, but I don't. It's not the same thing. Um, I like the concept of Bookmap where they're showing you stops and icebergs and stuff. Um, but the harsh reality of it is the majority of people that are using Bookmap probably are not configuring it correctly. You know, uh, as an example, the one that's on YouTube, Think with Bookmap, right? Now the guy's doing a great job. He's basically giving everyone the opportunity to check out Bookmap and then sign up for it themselves. I think Bookmap is pretty expensive for what it is, but I've watched that before and had up my DOMs like this, okay, and I saw it say like what's the call out? It says something like buy ice NQ or something, right? And this is when I had the prints, and it's calling an iceberg for like 10 contracts and stuff, you know, and people are watching that and actually using it and stuff, and I'm like, there's nothing here. Do you know what I mean? It's just literally bubbles and loads of colors, you know. So being relative, I don't know. I feel like I'm in a bit of a critical mood today, but these tools are only good unless you know how to use the damn things, right? Just because we have a depth of market up here and we can see inside prints doesn't mean there's an edge. You know, same as that Bookmap stuff, right? And I feel that you'd really need to control the thresholds for these. Um, but I can guarantee there'll be a lot of people that won't. Jeez, oh, 4K. Oh, really, Steve? Wow. So I've spent some time watching that because when Bookmap came out and it was, you know, the craze and stuff, I was like, right, so what really is the sitch with this? Now, as we know, Bookmap on ES right now must be a Christmas tree. If anyone can look at that, what are these clusters looking like? They must be bobbing around. It must be like orange and red heat map bobbing constantly. You know, for this cluster here, this just constantly moves and it'll look like it's just disappeared for a second, then it's back. You know? So it's there is that to contend with, and then people don't realise that that's the thing. There is the iceberg threshold that you need to configure, and then to be honest with you, before I pass judgment on this one, I really need to check out what the logic and API is behind it. But stop orders, as we know, are pretty much a best guess, right? They're kept broker side, so almost in essence they're just classing a sweep or a blip in price as stop orders. Now we've covered this in the stream where you can see it on the DOM, you know, where when the sort of sweep per se and stop run happens, there is a sort of behavior that it looks like, so you can see it. So I would like to see how how their logic is for their callouts for, like, I don't know, buy stop or sell stops triggered or something. You know what I mean? And again, you need to configure that. Yeah, exactly, Steve. That's the thing. Yeah, that's that. Honestly, that's the thing. Knockout. I've watched that, and um, I've had them up with my depth of market, and I don't understand the volume bubbles either, right? And also the noises are kind of annoying. It's kind of, you know, it's almost like it sounds like a bouncing, like a ball's bouncing. You know what I mean? Do you guys get that kind of noise? And also as well, God, I am in the critical mood today. Um, you know, if you've got this constant buy stop NQ, sell stop going on, ice, you know, you're like fucking, and it's only, and they're calling them their own like 10 contracts, so it would drive you mental. It's the same thing when I use tick strike. I need to set the thresholds up to like 11 and 12 for tick strike because the constant, you know, ticking and wooting noises and stuff drives me bonkers. Right, is that why, Steve? He's fucking everybody's hitting on. Yeah. Yeah, it's funny. Literally, I'm not joking. I think it called an iceberg on NQ for like 10 contracts or something. Ridiculous. Yeah, it's the same as Tick Strike as well. Tick Strike's really good, but you need to increase the thresholds massively, up to like 11 and 12 and stuff. Otherwise, you just hear this constant ticking in your ear. And if I'm actually honest with you, see all those constant noises and shit like that, it makes me anxious as hell. You know, I like to trade in silence, to be honest. Not saying I don't like visual and audible cues, but not constant. Is it not based on movement or something, Daniel? I've seen people say that before. What's your? Because I think their algorithms are not public for it, right? Oh, really? How did you find that out? Did is someone kind of tried to crack it or something? Oh, nice. I suppose the only thing it's good is to have the only valuable part that I can see for it is to have the underlying equities up when you're trading. You know, the Mag Sevens. To be honest. Nice, Daniel. That you're using just a DOM. So I think Pig on Bookmap, like the limit orders are like a heat reference. Um, so basically thicker orders or big orders where liquidity is in the book is it's kind of like the sun. You know, the more warmth it is, the heat, the more thick the book is. The trouble is that ES right now is just these order clusters. So people are looking at this and thinking, that don't know that this is an algo that's never going to be filled. They'd be looking at it and being like, what the heck? Yeah, one of the main things I can think of is just for that is just underlying equities. You know, the Mag Sevens pretty much having that up to see, you know, if it's hitting the lows and there's some size coming into like Apple and Tesla and so on. You know, it helps. Yeah, Steve. Yeah, that's what I was thinking. That's what I was thinking. Which, if I'm honest with you, my when the book is this thin, it's you know it's the difficult market. You know, they just order flow becomes more challenging in a thinner book. To be honest. Mm. How do you find? I've watched the DOM comparisons before. Bookmaps seems to be really responsive. Yeah, Pig. There's a happy medium. I mean, when Treasuries is the absolute extreme right now, that's just untradeable. But then, in my opinion, so is also NQ for order flow, right? Because the thinner the book, the more they split up orders, the more price gets pulled. You know, it's just you need different strategies, and you know the type of stuff that I trade normally is not the same when it's this thin. So it's the different strategy you need, and you probably need to be going for slightly more for your targets, for example. Because well, you don't need to, but you can because it's you're gonna get the movement for it, right? But with a thicker book, like when Treasuries opens in the first couple of hours, for example, in a 10-year, you know, you're maybe 4K bidding offered, current price, you know, 2K, 2K for the current tick, and then you just see them rebidding and reoffering and pulling prices, and it's much easier to read. Oh, they have, Steve. That's quite nice of them. It's a good idea. Because it literally must be like a Christmas tree on there. Yeah, pig. Prices move extremely quickly in a thin book, and also, you know, to spot absorption, for example, it happens over more like so treasuries, for example, you can spot absorption in literally one tick, right? It's extremely obvious where you know, say there's 1K at a price, they'll hit 1,000, then they'll reload, and then before you know it, there's 4K there, so it's a huge iceberg there, right? You can spot that in the literal tick. On the absolute other end of the extreme, you've got NQ, where they never do it over one tick. They're doing it over more likely like 3 points. And when ES is this thin, they're probably now doing it over like 2 points, so they don't just absorb over a few ticks. They'll distribute their orders across a couple of points. Right. I'm with you. Nice. It'd be good to remove that, to be honest. And also, has anyone got a theory on what it actually is apart from a range capping algo and cluster? I was thinking it was maybe like a buying or selling program or something, but it's happening in different market conditions now. So the only reason or reasoning I've got for what it's actually doing is to basically just distort the book, to be annoying, to affect other algorithms, and basically just affect the depth of the book, throw everything off. What I don't understand though, right, is this not technically, is that not technically illegal? Do you know what I mean? They literally, they're not even so the spoofing going on, right? They've just got a permanent spoof happening, right? Is no one thought of bringing this up to like the regulators or something? How can you just layer out, there's 700 contracts in the offer and 700 on the bid that is never going to be filled? Yeah, I mean this is the thing. It's not even like, I can understand where they take a price, then they spoof the offer that's maybe one or two ticks away to make people maybe sell more into the bid so they can get an extra few ticks, right? I understand that. They do that a lot, right? So they can eke out an extra few ticks or get some more fills. I can understand that. But this thing that they've got going on is just, in my opinion, is basically getting their two fingers to the regulators and saying, go fuck yourself. Literally. I mean, this has been here now for I think a month, with a couple of days in between where it's not been, with absolutely no intention of being filled. Exactly, Pig. That's what we're saying. Is it's not liquidity. It's. I'm just trying to understand the reasoning for it though. Right? I mean, think about it. So some quant dudes, right, and a large firm, probably one of the big four, has deployed this, right? And the objective of it has been, this is never going to be filled, it's going to track price, and it's done on the bid and offer. So it has to be something to do with the range, right? Has to be. So, I mean, it's never going to be filled, so it has to be something like they're capping it. And how many ticks away is it? I'm going to actually quickly screenshot. Is it 10 to 12 ticks? Let me, because I can't do it while it's moving. Let me snipping tool this. I'm curious. Right. I would try and snip it when it's not exactly at the right spot, wouldn't I? Can someone count the ticks if you can? I think it's 10 to 12 ticks on each side. But anyway, I'm too busy blabbing. We've got market on close. Thank you, Trader Boy, for reminding us. We'll discuss the cluster once this comes in. We have a minute remaining. Yeah, exactly, JP. I mean, it has to be one of the big market making firms that are doing it. Maybe that if price instantly goes 10 or 12 ticks against them or whatever, they can bash it back in or something. But it's certainly annoying. Right, so it's 12 to 14 ticks. So what would be interesting to see what the ATR is if it is that. Oh, it's just disappeared, so it disappears after the market on close just comes out. See that? Because they'll probably get tagged when that happens. And then it just comes out and comes back in after that's done. But you're right, Daniel. Though it's not even flashing. You know, sometimes they flash it and pull it, but it's just following price continuously. So we'll see what we can do. I mean, really the plays I expect is just to finish in balance here, most likely. We may get a sweep down here if we can, and then potentially whip our way. It's quite far away though. This line was the overnight low. It's a bit negative delta coming in. Let's see if the bid can just be pulled and we can really drop. That would be cool. So we're just approaching the overnight low. Okay, someone just did a bigger order there, 200 filled that they hit into. See if they can break 54 and a quarter. I kind of feel like they're just going to end at 70s or so on here. Back up through POC of the day. Look how much this is just skipping through price, it's crazy. Here we go, a little bit two-way. The sellers are definitely stepping in though. The amount of selling that is coming in. If we do take out this level here, it could be pretty quickly to the low session. But they need to break here first. That's literally the value area low for the day. So we should maybe see some stops below here if they can bang it. See if they can go. It should be going now. Not going as quick as I would like. Should be. There we go. That's what I was expecting. Okay, this could dive bomb pretty quickly. Now, kind of in no man's land right now. Someone bar needs to step in if they don't. Wow, they just absolutely hit it. There we go. Yeah, it's quite a while away to low session, to be honest. But nothing moves quicker than a selling market, does it? Alex, how's it going? Good evening, good afternoon. It makes sense now to ram this back up. I kind of want to see for my bear side coming out for us to go down more, but we shall see. See where the sort of initial balance was created, the 54s, if that can hold. Sellers are just really coming in, aren't they, here? I mean, there's been, in the last 20 minutes, 8,000 negative. Okay, so sellers need to try and break through here. Seems like they are running out of steam a little bit. But again, there is no buyers really coming in. So we shall see. We have 3 minutes until the algo is on, which would make sense if they can try and drive it down a little bit more, absorb more in the bid, and then ram it back up to, you know, sort of 60s, 70s range. Or we just hit the floor. The buyers are absorbing a lot down here though, a lot. Couple of thousand contracts now. Let's see if they do need to start getting a little bit aggressive themselves, because if this selling does continue, there's only so much they can absorb. It's like a one-way train at the minute. Okay, need to continually hit it here. Someone is again stepping up at 43.5 and absorbing. Wow. This is just one-way train action, man. Just continually hitting it. Buyers are going to need to start stepping in soon. 600 absorbed in this one price. So sellers are having to work awfully hard to push this down. Awfully hard at the moment. Okay, 30 seconds. Here we go. Yeah. Look at the amount of absorption down here, it's crazy. See if they can still bang it back up. Back up to say 60s. The offer needs to be pulled, mind you, to do so. Really, for buyers, it should not be getting below 40.5s now. Here we go. This is madness, the amount of selling that's coming in here. If this manages to break this low session here, there's going to be a lot of long liquidations coming in. A lot. Be surprised if you take it all the way down here in the next couple of minutes, to be honest. Well, they very well could. This is certainly one-way train action at the moment. Okay, so buyers have just stepped in here. Our seller's going to step off the gas. To be honest, I've run out of time now. I mean, it's pretty much all she wrote after the 2 to 3 minute mark after 4 PM. That is it. Is there any earnings out or anything? Cal, it's crazy conditions at the moment. This is just a complete one-way train. Are they really going to drive it below the low session after this time? There's still some volume coming in as well. Wow. Surely not. Surely they cannot take this low of day and trigger orders at this time. They never do that at this time. See if today is one of the edge cases. I mean, it's so close, they could. Yeah, pig. Crazy. Right, surely the fact that they're this low, they need to bang it. But so there is going to be some stops down here. If this was 10 minutes earlier, I would say that this could be a bloodbath. But I suspect that if they can get down to 32s, they'll maybe just get out of more positions and then sort of reverse it back up. But it looks like we're going to end in a spike at the moment. Exactly. If this continues at this pace, I think the stock market's going to be in trouble, to be honest. The offer was just pulled there. Some size come in and they've just lifted like 6 or 7 ticks there with a couple hundred contracts. The offer has just been pulled now. But there's not enough gas or juice left in the squeeze now. So we're probably just going to range around here. Maybe 40s up at this price. Just can't see us getting any real further ahead now with all the volume been done. Yeah, how thick is the book? Can you send a screenshot of the DOM for AMD? Curious to see what the bid and offer thickness is like on AMD. NQ is just absolutely dumping. It's a piece of intraday level break. It's very, very rare that you see just no let up on the offer like this. Even at this time, they're still absorbing. If you guys can hit the like button for me. I see there's 29 of you lovely people watching and only 19 likes. Can you sort that, please? Let's get to an equal number if you can. That would be much appreciated. Yeah, I just don't think there's enough juice to get us down there. So, and we're certainly not, with how strong the offer's been, we're not getting all the way back up here, that's for sure. So most likely we're now just going to faff around, 40, 41s, potentially press here. So we're going to end at this spike. Then we may see the overnight session, just the offer be pulled. We maybe then try and reclaim this area on overnight and then potentially dump it tomorrow. We'll see. Daniel, I do that because I trade treasuries, to be honest, and I find it hard to. I thought I could do it, but if I'm honest with you, it's very hard to answer questions, chat, and trade and manage a position and watch the dot. Like it's my brain's. I can't multitask like that. to be honest with you. So normally if I'm done, I'll come on. There'll be sometimes that if I'm streaming for the session, I'll need to do that at some point, and we can discuss things. But I find it really really challenging to do everything at once. If I'm honest with you, man. Yeah, exactly. That's just been honest. It's hard to watch the DOMs, watch correlations, answer the chats. It's just really hard. Because if I'm honest with you, as you guys know, when you watch the DOM, it's very taxing. When you're watching multiple DOMs, especially in treasuries, when you're watching the rebids and reoffers and what's been pulled, what's been stacked, and you're watching it across multiple DOMs. And as well with the stream, it then becomes awfully boring because I'm not really talking. Do you know what I mean? Steve, only one can multitask. Uh, yeah, exactly. I mean, if I was trading and I was just doing like candlestick patterns or whatever, that makes sense. But it's I'm gonna be honest, I find trading for like 3-4 hours a day, when you're really in the zone watching it, it's mentally exhausting. Like it's hard, you know. So adding any extra stimulus in there is not great. I mean, when I'm trading and the postman comes, I get fucking pissed off. Do you know what I mean? Things like that, or like Amazon arrives or something. It breaks my concentration. But I would like to. I think if I start to finish earlier, dude, I'll try and come on, because I'm aware that we kind of only really get a couple hours volume. Typically, the first hour or so of the stream is the volume's pretty light. It's kind of a bit boring. When we had the day like yesterday. Yesterday was great for order flow. It was a really the order flow was great yesterday, man. It was sticker book. Really good talking examples and stuff in it. It's nice when that happens. And if I'm honest, when the market is as thin as this, it's actually, well, it's not. I was about to say it's thicker. It's not. I find that when the market is thinner, I find it harder to read. It's just a completely different strategy. In general, I think I didn't mean that, but I didn't know you could do that. That was quite handy. Like some of the stuff you were saying, Daniel, as an example, is probably a different strategy for thinner markets than thicker ones. Things like momentum tails and noticing the sweeps, it's just different visual cues you need. Because as you know, when the book is this thin, when they pull bids and pull offers, it basically pulls off like 4 or 5 ticks, you know. Pig. Yeah, no, exactly. I would normally say, mate, if are you controlling your risk with that, or are you just nervous in general? I think when you've not been doing it for so long, I think there's a tendency where you just get nervous being in a trade, like at all, regardless of the size. If you are like that, definitely start at the smallest and realize what your coping point is for it, if that makes sense. Like the only way I can buy and hold things is like long-term ETF mirrors the S&P, long-term investing, no leverage, crypto, long-term holding, no leverage. That's it. I'm not joking. I wouldn't even. I would maybe check them once a month, if that, because you know, it's just a different trade. You're not what you know. If it goes up 1% or down 1%, that's all you lose, right? Right. Yeah, I'm with you. I'm with you. Makes sense, pig. That's a good point. Let me know where are all you guys based. Let me know that. I've never actually asked you all before. Ding 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 ding. The guys are done. They're away home. See that? Out of the office. If only. They've just turned the server off. Oh, they've not paid their AWS bill. Oh, Steve. Scotland too. Can write, dude. Brian, Ireland. Montreal. Jeez. Florida. Based right now in Portugal. Nice. Did you have any involvement in crypto in the past, Pig, by any chance? Oh, okay. Never touched. Okay. I just thought there was some tax benefits of crypto in Portugal, but anyways, I'll be quiet. GA, is that New Zealand? Oh, you live in Dundee, Steve. Jeez. Haha. I spent many years in Dundee in my time. Many years, dude. I used to stay in a flat next to the Wellgate, above that rough pub. If you know what I'm talking about, it's a little Jakey Man's pub. There's a flat above there. You can top story flat, just stay in there. Small world. That was, God, like 15 years ago or so. Yeah, Dundee's. Once you can understand the lingo. Perth Road, know where you're at. Nice one. Yeah, I've still got a number of friends there and stuff. I can't remember what it was called, but it's you'll know what I'm talking about. It's beside the Wellgate. There's like an old man's pub just at the crossroads before you take a right down to the bus station. Sort of flat above there. If you know where I'm at, Steve. It's pretty central anyway. It was next to the DW gym. Well, before that went bust, actually. You know where I'm at? Nice. Nice. Look at that, eh? It went full circle. Full circle in life. It's pretty crazy when you think about that. But Jay, nice you're from New Zealand. The other side, you'll be Can you give us some of the weather? That would be really nice if you could donate some of that. That would be fab. Still in the key, nice. Oh, so a lot of time spent north, nice. Nice pig. Yeah, the drive from, I'm just outside Glasgow, we're up a couple of events in Inverness, and my god, the drive's a nightmare to get up there. I was up, there's a distillery in Inverness that's recently opened. Is it like Olivist or something? It's called. That's early morning, Jay. Nice. Nice, dude. Well, we're other sides of the world, man. It's pretty cool that when you think about it, you know, how we can all collaborate, completely different sides of the world, and you know, stream up-to-date data that's maybe only like 5 to 10 seconds delayed at different sides of the world. Fucking hell, man. It's crazy. You should catch the last 20 minutes and rewatch. Nice. Yeah, it's incredible how that's the case. It's pretty cool as well. Surprisingly, I think actually a lot of it's actually quite mixed. The channel, it's mostly US and UK, going by what YouTube stats say. Yeah, we're living in the future, Steve. Exactly. Exactly. I suppose one of the main objectives of the channel was to meet like-minded traders, so we definitely achieved that, which is great. Because you know, you guys know some of you are relatively new, but a lot of you have been around the block, and trading is really hard. And sadly, when you first go into YouTube and you Google or you search some things, people make it sound so damn easy. Or you go on to some streams, because there's so many people that stream these days as well. Because I'm into trading, I've got a channel and I Google searches around the CME and futures and stuff. YouTube shows me them, and every single one I go onto, it's just absolutely filled full of prop firm, stuff. Go to this one, and this one, and none of it's really about, it's more just a gambling entertainment side of things, I suppose. Nice, Kel. That's impressive, isn't it? How it's good. It's nice. That's the one thing that is fantastic about futures. How it's centralized, and the book is transparent. Hold my beer for all the spoofing, but it's nice that we can see all the same things and reference the same points. That's what I think is really good. Ah, nice. Ed Cammy's a great dude. He's a great dude. I think he's probably one of the reasons that helped the channel actually grow, to be honest. Yeah, I see he's transitioned to OrderFlow now and making great strides. I think he's seen the light from ICT. I'm not really one to bash other strategies and stuff, but ICT's not it. It just doesn't make any logical sense. I would like to think that all you guys are critical thinkers, and how you can determine a fair value gap as a big candle without knowing the order flow behind it, or if it's an imbalance, is beyond me. Oh, he did. Nice. No, it's Peg. You don't even want to look at it. It's just a waste of time. ICT. The guy literally calls a sweep just rehashed names. He calls a sweep like turtle soup and stuff. I mean, it's fucking ridiculous. It's absolutely nonsense. Nonsense. And typically what you'll find with these guys is they've got that many different strategies or whatever you call them. And if you do one and it fails, you're like, oh well, you just didn't use it in the kill zone and that wasn't turtle soup. You should use the silver bullet 22 mentorship or some nonsense. So it's just, I don't know. That's the trouble, is when you first start with trading, that's the type of shit that you contend with. You know, you go to TradingView, you actually can use it for free with TradingView. You go to a prop firm and you draw random rectangles on big candles in a couple of hour time frame, and basically just short when it retraces back into the candle or whatever, and then wonder why you don't consistently make money. Do you know what I mean? You've got no idea about correlations, no idea what a bid is, what an offer is, who even the competition are, what is a market maker. Do you know what I mean? It's so far away from what is required to have longevity in this industry. It's crazy. You know, so if you're relatively new and you found the channel, happy days, because at least something I can provide you is experience and try and teach you some of the things that I've spent years probably hitting my head against a wall to try and improve upon. Exactly, Daniel, exactly. And realistically, right, you know, if Goldman takes an order for just say 2,000 contracts, do you think they give a shit where a fair value gap is? They're gonna, if you had thousands of orders to execute, you're most likely gonna say, without any strategies, you can say, right, where is the most money being conducted today? Whereabouts can I comfortably get this off, without really a hitch, for example. You know, very simply, it's got nothing to do with the whatever these guys are teaching, to be honest. And that's where maybe over time, I find it quite challenging to, because a lot of people come to the channel and they ask, what strategies do you recommend and stuff, and I've never really thought about it like that, because it's pretty challenging after I've been doing this for over 10 years to recommend something, because trading is so discretionary, you know, and you really need to work on your journal. It's you as a person. You need to have a statistical edge in your favor, because algorithms will be playing on those statistics, and you need to understand the theory of the market and who you're up against. That is pretty much it. As for me saying, right guys, here's a rectangle, when the market comes into this rectangle and you see some buying delta, press buy, and I don't know, cross your fingers with a 2-to-1 and pray in 6 months that you'll return a couple of percent, you know. And let's be serious. Back testing as well is extremely challenging too. You need to front test. You need to front test them, and if you can, do it with a really small amount of money that you're willing to lose, so that you've got skin in the game. If you can treat sim as you would treat a live account, more power to you. Sadly, I can't. I just can't. Wish I could. Start with technical analysis book. Nice. Well, that's exactly it. Daniel. I mean, as everything evolves, right, the market is completely different. Every year that goes by, technology improves, people get smarter, education gets better, And it's not just in financial markets, it's in every single market, you know. Coca-Cola brings out more products, you know. Dieting bring out more products. Gyms bring out better equipment, you know. Nike brings out better running shoes, you know. Golf balls have better technology to make the ball go further. Do you know what I mean? Just a constantly improving technology. Trading is no different. So what worked 5 years ago, or certainly pre-screens, is not going to work today. And quite right. If you guys ever watched, seen any of that stuff in the pit, it was like fucking organised chaos. They would do orders and it would go down in like a sort of dumbbell waiter thing, and you had literal bodies of people manually keying orders into a clearing firm. I mean, talk about inefficiency. Uh, how much human error is happened to it? This literally had to go automated in a way, right? I mean, when you watch some of that, you just sit and think, holy smokes, how did any of that happen? You know, but the difference with that is you actually got to see the competition, whereas now you don't. And it's much easier to grasp the concept that when it's actual people shouting and putting their hands up, that they've got ulterior motives to potentially flash and to buy. People can't seem to grasp that that's the same behaviour that happens on the bid and offer at the moment, just by machines. Exactly, Steve. Exactly. Fuck, if I could do what I do on a daily basis and basically just go and pay a developer, you know, to do it, I would do it, and I wouldn't be trading. It's big Scientology for traders. Yeah, just seen that now, dude. Paper trade for goodwill, definitely isn't the same. Yeah, exactly. Good old Bernie, yeah. The thing is that I mean, what's different? This is the one thing I always think about. Um, what Bernie Madoff carried out and what monetary policy is. I mean, what's the difference? You know, basically Bernie Madoff just run out of cash. You know, sadly, monetary policy can't. They just print more of it and issue more bonds. Exactly, Daniel. Exactly. Just crazy how much it's changed. To be honest, I think there's good and bad parts to it. What I would like to see though would be a little bit more, transparency on the book side, especially ES has just gone to shit in the last couple of years since COVID. Um, I would also like to see if the regulators could do a little bit more of its spoofing, because it happens every day. And this Costa algo is just taking absolute piss. Has to be one of the largest firms, and as we discussed actually in the recent video, the exchanges turn a blind eye to this. Basically, they're not going to poke the nest and flag anything because they literally need these firms. Like, if they don't have these firms, they're in trouble because they need stability and an efficient market. Otherwise, everything goes to shit. The exchange is a profit-making business, you know. The last thing they want is their products to be out of whack and be in the papers, you know. Yeah, exactly. Exactly. And they never publish any of it either, that's the trouble. I mean, probably every couple of quarters, your Goldmans and so on and so forth get some sort of fines, you know, for bending the rules. But as we know, it's just a cost of doing business to them, right? It's not like they lose a license or anything. They just get a couple of £1 million fine, but he probably made that in a day with trading anyway. And as you know, any sort of government-run public body, a lot of the time are just so slow. They don't. Um, they're just not fast at doing anything, and probably don't have the expertise and knowledge to do it either. You know? Yeah, the fines are a joke. Yeah, I mean, I would actually. So that guy used to work in Futex, right? And what I find is, what I would need to see about that would be how aggressively though was he spoofing? Do you know what I mean? Was he like, say we see markets like this, was he layering like 400, 4, or thousands at each price? Do you know what I mean? Like, is that what he was doing? And then basically the bid was just been aggressively pulled continuously because they were scared of this? Is that what he was doing? Or, I mean, how aggressively was he spoofing? Or was he just doing like this, like laying out 100 or something? Do you know? So he's 3, 4 ticks away. So give me an example, right? Like say it's it would have been thicker back then. So say it was 500 bid and offered, right? What was he stacking? Did it tell you that? No problem, Piggy boy. Have a good evening, dude. So you're saying, Daniel, when they went for him, he was able to pull and then hit them on the other side, right? Yeah, of course he had an algo, right? But I'm just meaning like how thick were the orders? Like how thick was he to start in the book? Right. So was he constantly reoffering and rebidding like that? So he would just constantly put it to the back of the queue, right? Continually flashing 2 to 400. And was he doing it? I'm just trying to visualize this. So 3, 4 ticks away. In fact, let me screen grab this quickly. I want to see that. Just let me run through this. In fact, I've already got this up. Right. So let me get this pen. So ignore that this is like this, right? So say 3, 4 ticks away, right? So here. So he's layering 400s, right? Here. Okay. I don't know why I'm asking this as if you've literally spoke to the guy. I don't know why I'm, you know, I don't know how you're meant to know this unless you've, I don't know, read a book or something, but it went extremely in depth. But so say he's 4 ticks away. Was he layering like 400 here as well? At 3 ticks, right? Or was he just like, so he would layer 400 here, and it would be 469, right? When the other would pull, he would pull his order and then continually reload it to go back in the queue. And was he doing it just at 3, 4 ticks, or did he have a few stacked? Yeah, of course, market moves towards size. Oh, you do it both sides. Right. Okay. So basically what you're saying here is, so we'd have it like here. So basically, he's basically doing what these fuckers are doing with the bracket, but then never going to be filled. Okay. So in essence, he's doing this: 400 here, 400 here. Market obviously goes to 1 to seek the liquidity, right? So they hit in, okay, down here, right? Comes down here. He pulls this order, right? And he'll lift back up into them. Or is he then joining? Is what you're saying. So he's pulling, and then is he then basically joining to hit into it? Well, this is the thing. I don't know why. I think it's quite interesting to discuss this, to be honest. Because as we know, the market seeks liquidity, right? The market loves to fill out size. But if it's 4 ticks away on the offer and 4 ticks away in the bid, right? You're hitting down into it, so say they're going to go down. He cancels out the order, and then is he then hitting the bid to go with it? And then basically then tanking it and continually doing this on the way down? Joins. Right, okay. Okay. So in essence, market appears weak to seek the liquidity. Wow, fucking hell, I see what you mean. Okay. Okay. So hits into that, pulls that order, then the bids get pulled below while he continually pulls down the 400 all the time. And then this gets quite aggressive though if you add in a couple more stackaroos in there, you know? And I wonder how much, because you can imagine what that was like if that was pulled and then he hits a couple hundred contracts, or I don't know what size he was hitting, but say 50, 100 contracts or something. You can imagine how much the bids would pull away below that, right? Considering that's pulled at a flash and then there's some size hitting. It's definitely going to drop 3-4 ticks. Yeah, exactly, Daniel. That's what I was saying in that latest video, that pretty much they offer the APIs and capabilities for some of the firms to do that. They're completely priced out the market for retail now. Interesting though, but then I suppose, right, what the hell is different to this? I suppose it's too far away. I wonder if in these rules that the bracket I'll go here, right, like here and here. I wonder if it has to be like a certain amount of ticks away from price. Because they actually do this in treasuries quite a bit. So they'll do it here and here. They do it in every market, to be honest. Outside the 10, you think, yeah. I wonder if there's a rule for that. I was thinking it's probably ATR, but it's more than likely going to be it's more than likely going to be like a regulation or something that 10 ticks is too far away to ultimately affect price. So if it's out with the 10, I'm just assuming here, if it's out with the 10 ticks, then they can't get penalised for it because it's too far away to quote unquote distort the book. But I think that's a lot of bullshit, because as we know, that affects the other algorithms, right? Interesting though. So that's a really good point, Kyle. Jagger in Discord had actually said that one of them was tagged at a Lowe's, I think, or something. I can't remember what day it was. I need to ask him and see if we can bring up the data on it. The trouble is, when you replay MBO on Sierra, you can't Can't bring it up. Well, this is the thing. We're probably driving ourselves crazy about like the why behind it, but it's not. What is the strategy though? That's the thing. It's never going to get filled. The only real reason that this would be put in is basically to distort the liquidity in the book and to throw off order flow edge. You know, because a lot of these algorithms will be repricing depending on net longs and net shorts and who's extended and who's not, and what liquidity is behind them to back it up and so on. You know, and as long as these algos are there, basically fucking up those ratios, it just affects things. And I think that's their objective. Nikos, you think you made it to disturb the heat maps? Yeah, probably, man. Probably. More than likely. I mean, it's probably going to be Citadel, DRW, Goldman, or JP or something. It's probably one of the big market making firms that's obligated to trade. And it's weird that they're only doing it on, or so blatantly on ES. Because let's be serious, right? Everyone that's trading order flow is seeing this. Not just us. Everyone is. And surely people are saying, what the fuck is this? And they must have. Someone must have been pissed off after losing a day, screenshot this and sent it to the regulators or something, that whistleblower thing, right? Surely. And I think you'll probably find that if a large firm deploys this, right, it will go through compliance and risk and say, is any of our strategies that we're doing, are they up to regulations and par, and can we be screwed on them? Pretty much. You know? These guys have that many bodies and that much money that they have, you know, someone to press the button to put it to the printer, someone to go and collect it from the printer, he passes it to someone to take it to the guy that pressed the button. You know what I mean? That's how these companies work, these big corporate structures. Kyle, I mean, the thing is, they've pretty much got all the data in the world that is analysing all of that anyway, you know. There'll be really sophisticated algorithms that they'll constantly know what the net position is. They'll be taking order IDs as well, so they'll know above a certain size. I mean, think about that. An algorithm can track basically unlimited amount of data to spit out a probability and then play out on that, and as new data comes in, it adjusts those numbers and it'll take positions based on it. And they also won't just be looking at 4 DOMs, they'll be looking at the whole market context to factor it in. When you think about it like that, as the size and just how all that comes in, it's extremely complex. That's why these guys are taking, you know, the best quants in the world from some of the best universities and putting them in to just really code strategies to make money. That's why you see a lot of these guys coming out of these firms and saying things like, you know, I'm basically providing no value to society. All I'm doing is using my knowledge to basically take money off people. So they end up feeling that they're fucking themselves morally, to be honest. A lot of the time. Hey Brian, there is a link in the bio of the channel, dude. There's a link in the bio of the channel, it's free to join. You don't really charge for anything here, to be honest. All I ask is if you enjoy the content and you want to support, you can do so if you so desire. I don't think we'll paywall it at some point. I don't know what we'll do about that. The only time I can see that we ever do something along those lines is if we get like really infiltrated by tons of scammers and bots and shit. You know, where we put an absolute nominal fee to stop these guys getting into the servers. Because it looks like at the moment they're putting in moles in there because we've got approximately 350 people now in the Discord, man, which is a lot of people. Um, and it appears like what's happening is the scammers are putting in a mole, and then they're ultimately messaging people pretending to be me. And they're doing a pretty good job at it, man. I mean, they're actually got nitro. I thought if I put my own dom thing in there, put some extra things, and had that little smoke and stuff, I thought it would be pretty, Um, but they're copying all of that, to be honest. No, so just make sure I'm not gonna. Oh, really, Steve? Fucking hell. See, this is the thing. I suppose here's the problem. Is some people actually friend request me, you know, and I accept them and chat to them. I suppose the thing is, you guys just need to make sure you've got your wits about you. To be honest. Um. Exactly, and that's the only time I would think that if we do get, it's going to be hard to track because once upon a time, if we do double the amount of members up to 700 members, it's going to be possible to track all of that. So we need to see just how bad it gets, to be honest, and manage it. Oh, let's see. Okay, okay. Maybe we need to do something like that, like a verification. We can look all into that. Just please don't get scammed, people. We get scammed daily with the markets. I don't need some random scammer trying to. I just don't really know what would they say to you? Give me money, send it to my Bitcoin wallet, buy me gift cards. I mean, what would they do? Steve. Oh God, that's fucking funny. What a thing to say to them. Hit them with a Dundee patter. uh, the name is spelt wrong. A lot of Apex scams. How do they scam people doing that though? Like, I'm not really too up on the scamming world. How do they? What did they say? Join a fake Apex or something? How does that work? I will pass Apex for you. Pay me after I get you the account. Ah, okay. So how does that work though? Do you like buy an account and then give them the details or something? Is that how that works? But then how can they do anything with that? Or do they then? I don't know how that works. And do they? I suppose do they then say, "Look, I've passed the account for you" or something? Ah, they trade your account for you for a fee. Right, I've seen a lot of stupid ads for that as well. How can anyone like that will pass your evaluation account stuff? How how is that even a thing? Like I'm not talking about the scamming part. How are they even going to pass it? What, do they just like toss a coin and go all in or something? I mean, what do they do? Actually, what would actually be a really cool video would be to to use one of these companies. Actually, that'd be really funny. Yeah, that's the only thing I can think they would do. Just so they're literally just tossing a coin to hope they can get money. That's crazy. I can show you one on YouTube. Yeah, I would be interested to see. I think that's pretty crazy that anyone would do that. I mean, I'm anyone can just pick a position and go 10 contracts and close the computer. Yeah, ping it in the Discord or send me a message or something with it, dude. If you got a link, I don't think you can post links in the chat. I don't remember changing any setting for that, but I think I've said some people that you can't. Oh, really? Jeez. Crazy. Where is the Discord? Um, it's in. If you go into the About Us section of the channel, there's a link there on the channel, dude. If you go to like the channel and go to About Us, there's a link. This Discord link is in there, dude. Sweet. No problemo. Right, chaps and chapettes, I think I am going to get some food and relax. Yeah, ping me a message with that, Daniel. It's good, dude. That'd be great. So hope you guys have a great evening. You've enjoyed the stream. It's quite a long one today, actually. Let me know if you get any other questions before we wrap it. Cheers, Stevie boy. No problem, Kel. You too, mate. Cheers, Daniel. Hopefully you have a good evening as well. And everyone else. Peace out, guys. Ah, okay, what's the username? Give me a second, Daniel, before I click end. In fact, when you join, I'll see you joining and I'll message you in the chat thing. It's Mr. OrderFlow official is what it is. So I'll see you when you join in the chat, dude. Peace, guys.